Hi all, this is Steve Miley, the market chartist on behalf of ForexTraders.com, and we're now going to take a look at both the Australian dollar and the New Zealand dollar, and both of them setting up more negative within broader range environments for the first part of January in here, and real risk now for a more bearish shift for both the Aussie dollar versus the US dollar and the New Zealand dollar versus the US currency. So starting off with the Australian dollar, you can see this plunge lower so far in 2016, and the market is set up for a potential bullish breakout going into the end of last year for a challenge to 73.85, which would see a better basing structure here and a more bullish shift. However, this plunge lower more recently through 70.93 and through this trend line basing support line here leaves now risk down to 70.14. That's the low for Q4. Here's the Q4 range, 73.85 to 70.14. Risk through 70.14 then for a more bearish shift, then opening up the lows here from September of last year and the lows for last year on the cycle lows here, 69.36 and critically 68.94, a threat now we feel going into mid-January, but only triggered on more bearish theme through 70.14. For the New Zealand dollar, not as bearish a setup, but potentially there was more of a bullish break previously with this push up through trendline resistance, breaking out from this triangle and pushing up to challenge 68.97 at the end of last year, but the plunge back lower again, taking out previous support in here, and now risked certainly to the lower end of what we see again, the Q4 range of last year, 68.97 to 64.27, looking to the lower end of that range now going into this week, the balance of this week and going into mid-January, but real threat for a challenge to 64.27 and then for a more bearish shift through there into the balance of this month. This has been Steve Miley, the market chartist on behalf of ForexTraders.com, and I wish you a great trading day.